Hello guys, this is Dion. Welcome to my channel. Today we are doing trade analysis and entry. So we are going to analyze this chart and then look for entry setups. Okay. So guys, in trading you just need to expect three things. Okay, it's not two things. You need to expect three things. It's either you win, you lose, or you miss a trade. Those are the three things that you need to expect. And it's fine if either of them happen. Okay, you don't need to attach any emotions to them. If it happens, it happens. Okay, so this is a British pound versus the US dollar. Today I'm doing currencies since some people in the comment section don't like synthetic indices. So yeah, and as you can see, this is not the 15-minute chart. Yeah, where I normally enter on the 1 minute chart, but this is the 4 hour chart, meaning our entry time frame is going to be the 15-minute chart. Okay, so we'll just start from down below there. This is where, yeah, this is where the change of character happened, going to the upside. So, okay, let's do this. Let's do this. I'll just be doing a replay. Okay, the market was coming down. Yeah, and as you can see, it made a break of structure down here. There was a break of structure down here. Okay, this is a boss. Oops, this is a boss. Okay, and if this is a break of structure, meaning that is the high. All right, that is the high. So the market went through and then closed with this candle above that high there. This is where it made a change of character. That's our change of character right there. Okay, so in this situation, now you are looking for buys as it was coming down. I'm sorry guys, we would have started all the way back, but it is going to take like 3 hours more. So no, I want to do that with my students. So this is where the change of character happened. Okay, now I keep saying the same thing. Okay, if you've been watching my videos, I keep saying the same thing. Okay, first, look for inducement. Okay, after this change of character, wait for that inducement to be taken out for you to look for a POI. Don't start looking for a point of interest when inducement hasn't been taken out. Okay, so here, wait for inducement to be taken out. This is not inducement. Okay, as far as I'm concerned, inducement is all the way down here. These are inside bars, these are inside candles, they are inside this green candle here. All right, so let's just move. Okay, we have inducement right here. This is the pullback that we're looking for right here. That is our inducement. If you want, you can mark your inducement. If you know what inducement is, you can keep it in your head if you want. But if you want everything to be clear on your chart, label your inducements. Okay. So inducement has been taken out. The moment inducement has been taken out, you can look for your POI. And for you to look your POI, we are looking for a POI in a discount zone. In a discount zone. Okay. So move your Fibonacci down here. Okay. That is the low. And that is the high right there. Okay. And down here, from this equilibrium level here, can you see any inducement here? This is not, I mean, can you see any POI? This is not your POI. This is not POI. Okay, these are inside bars. They are inside this huge candle here. Okay, the only POI that I can see is all the way back here. Okay, this is not your POI here. This is not your POI. This is not your These are inside bars. They are inside this. Okay, so We can mark this candle right here. This is our POI. There's no need of you panicking or anything. Okay, just let it play out. If the market hasn't touched your POI, don't do anything. Okay, you are not a market maker or anything. Okay, you need to have rules for you to trade with, for you to have an edge over the market. It looks like it's still going, so let me just stretch it out. Okay, just wait. Okay, it has been touched right here, so go to the 15-minute chart, see what's happening. All right, so for some of you who don't know entry setups, I already have a video on entry setups. Okay, but just to give you an idea of what we are looking for, this is the first entry setup that you can look for, something like this. Okay, something like this, yeah, something like this is the entry setup we are looking for. Okay, so this is entry setup where you need inducement for the market, for you to enter into the market. Okay, and your inducement is here. The first pullback here is going to be your choke. This is going to be your choke. All right, I don't want to start teaching entry setups. There's already a video. Yeah, and then after there's a change of character on your first pullback there. You need inducement for you to enter into any POI that you can find there. Okay, whether it's a single candle order block or some people enter on just a fair value gap or just an ordinary order block. Okay, you can enter after taking out that inducement. Another entry setup that we are looking for is the one that just takes out this previous low here. Okay, so it makes a liquidity sweep. The liquidity sweep here, one of the candles just takes out this low, okay, and then closes within. Okay, it doesn't, the body doesn't close below there, it just closes within that area there, and then it makes a change of character. In this situation, you don't need inducement. Here you can just enter without inducement. You can just look for a POI somewhere. Okay, if there's any POI, you can look for it and then enter. Okay, if this is too hard for you to understand, you can watch my entry setups. It's not a long video. So yeah, so in this case, you can already see this was the pullback. The pullback is there, and then that is our low there. So here, this is the 15-minute chart, our entry time frame. Here you have a change of character. That's our change of character there. Now, already I can see inducement has already been taken out. Okay, so I can draw my Fibonacci from this low to that high, and then look for entry. When I'm looking for entry now, when I'm looking for a POI, here, when you look at this under the equilibrium here, can you see any POI here? These are already mitigated. The only POI that I can see is this one down here. Okay, this black candle right here, that is our POI. Okay, so do not force POIs. Okay, if the POI is not there, don't force it. If the POI is not there, don't force it. Okay, just let it play out. There's no need to rush. Okay, looks like it's still going. Okay. So this has been touched here. Oh, by the way, there's even a decision of POI here. Okay. So like I keep saying, I only have two POIs, a decisional and an extreme POI. So under this equilibrium level here, there was also this guy right here. This guy right here. This was a decision of POI. Okay. Sorry, I didn't see it. This was a decision of POI. Meaning, if you entered here, if you entered here, right here, okay, and then put your stop loss down here, you are going to lose it. Okay. The first take profit is supposed to be here. Today, I don't want to give you those tight take profits. I don't know. It's very hard for some people to move their stop losses. So I'll just keep it clean today and very clear and simpler. Yeah. So here you are going to lose. Never move your stop losses. If the market is coming down like this and then you start moving your stop losses like this, you are going to lose a lot of money. Okay. Just let it hit. Okay. And then move for look for other, especially when you already have an extreme POI here. Okay. So the market came down to this extreme POI. Even on this extreme POI, you do the same thing. Okay. You enter right here when the moment it's just touched. The moment the POI is touched, you put your stop loss just down there. Okay. The first tip is supposed to be here. That is your first TP. Okay. This is a risk to reward ratio of 1 to 5, which is just enough. Okay. If it actually goes your way. Yeah. So let's see. Okay, it's still playing around your level. These things take time, guys. Okay. These things take time sometimes. Just wait it out. Today I'm not even moving my stop loss to break even. Though it's very good for trade management, but I want to keep it simpler. Okay. So this one, it hit your first stop loss. So when your first stop loss is hit, I mean your first take profit is hit, sorry. When your first take profit is hit, you can go to the higher time frame. Here you take some of the profits off. Okay. I know the higher time frame on the 4 hour chart. On the 4 hour chart is where your main take profits are supposed to be. But take off some of your profits on the lower time frames. It's really going to help you out when the market doesn't go your way. Okay. It compensates for the losses that you are going to make. So when you go to the 4 hour chart, on the 4 hour chart here, if we look closely, if we look closely, this right here, let me show you this. This is what you do. Okay. These are levels where you take off some of the profits. These levels right here. Okay. So you have this level and then you have the final level right there where you are going to take your profits. Okay. So you've already taken something out from your lower time frame, and then here you can also take off some. If you want, you can just let it be. But if you are like me, you are definitely going to take off something here, which is a risk to reward ratio of 1 to 7, which is just fine. Okay, so let's just play it out again, see what's happening. Okay, all right. So the market has gone back to our POI, to the forward chart POI. Okay, So here, if there were any trades, assuming that you didn't move your stop loss to break even, you were going to lose those remaining trades, okay? But you've already taken out you took out some profits from somewhere here and then some of them out here. Guys, this is trading. This is not gambling, okay? This is not gambling. You take what the market gives you, okay? So when the market goes back to this POI, you start looking for a new buy setup. Okay, so go back to the 15-minute chart. Okay, under the 15-minute chart, we are still looking for uh buy setups. Since we are in an uptrend, we are still looking for buy setups. Here the market came down, went up. As you can see, there's no change of character here. Here it tried to go up, came down. Okay, so right here, if you don't know how to look for entry setups, this is going to be hard for you. It won't be that obvious. Okay, here this was the last pullback, and this candle right here closed above this pullback, so we have a change of character. That's a change of character right there. Okay, all right. Just be patient. So now, after this change of character right here, can you see any POI here? By the way, in this case, we don't even need inducement for us to enter. We don't even need the inducement for us to enter. If you know what I'm talking about, this is going to be very easy for you. Like I said, I only talked about two entry setups, the one that doesn't need inducement and the one that needs inducement. Okay. So this one, as you can see, it was just clearing out the lows here. From here, this was the low. Okay. This was the low, which was cleared out by this week right here. Okay. And then from this week here, you can clearly see there was no candle that closed below. They were just, I don't know what's happening to my chart. They were just clearing out the lows. Okay. Right there. Right there. As you can see. Yeah. The next one also, I think you get the idea. It was the same thing. Yeah. This one also, it was just the same thing. So these are small details that you need to, look forward to. But here we can't enter. As you can see, this single candle order block here, it was already mitigated. Okay. Okay, this setup right here, guys. All right. So let's look at this single candle order block right here. So after the market changed character right here, okay, when the market changed character here, this is the same candle that confirmed this as a single candle order block right here. Okay, this is our candle. This is our candle. So all right. So when the market came down here, this is where you are going to enter. Let's see. This is where you're going to enter right there. I know this looks very big on the lower time frame. So this is what you need to make sure again. So my first take profit is always support. It's always it always has to be a minimum of 1 to 3 when it comes to risk to reward ratio. Okay, when you look at this high here, this is not where you're supposed to take your this is not where you're supposed to take your profits. Okay, because this is a one-to-one risk to reward ratio, which is not good. Okay, so just move this. Yeah, this is risky, but you just need to make sure that you manage your trade very well. So if you want, you can remove some of the profits right here when the market reaches here. But I can see a high there on the 15-minute time frame, because this is where a break of structure happened. Okay, and that is the last high on the 15-minute time frame. So you can move it to there, right there. Okay, which is a risk to reward ratio of 1 to 5. Okay, okay, right there. Guys, single candle order blocks, I have a video on that too. So just make sure, okay, it already reached the risk to reward ratio of 3. So if you want, you can remove some of the profits. If you want, you can also wait for it to go to that high there, if it actually goes all the way up there. If you want to be very conservative, uh, take some of the profits off. Okay, looks like it actually went all the way. Yeah. Okay, so some of the profits can be taken out right here. Okay, there's no need of you waiting for the forward chart for you to take off some of the profits. Okay, so here we continue waiting. Okay, continue waiting. If the market can go all the way on the forward chart, it's even better. Yeah, so here we're just waiting. Looks like the market came down again. Okay, let me remove this. Here it looks like there was some, yeah, other block here. Okay, okay, but here you've already entered, so I'm not looking for a new setup here. So let's just see what happens, if anything happens. Okay, so if you entered somewhere here again on that order block, and then that is your high, yeah, you're going to get something off, but I don't think I would have entered there. So yeah, unless the market comes all the way down to take me out, then I can look for new setups. I know it sounds a bit selfish for some of you who are greedy, really greedy, but yeah, it's called risk management and trade management, guys. Okay, okay, let me go to the forward chart. It's moving very slow here. I want to see how it was moving. The market came down again. Okay, okay, okay. So if you are still holding on, by the way, you could have taken some profits out on this pullback here. Even here, there's an opportunity for you to take out something until the last point, which is right there. Okay, so let me remove this. I can mark this as a break of structure. This is your break of structure. Okay, you are now on the forward chart. You mark that as your break of structure. The market has broken structure. So all the things that we're doing were just on the lower time frame, the 15-minute time frame. So now look at this, guys. From this entry right here, this is a risk reward ratio of 1 to 19. Okay, you can grow your account like that. All right, so let's remove that and look for other stuff. So after a break of structure, always, like I said, look for where there's inducement. Where is your inducement? I can see a pullback here. If this is taken out, I'm putting out my, in fact, let me remove these things. Let me remove this thing. Okay, so here inducement has been taken out. Okay, and what do you do when inducement has been taken out? Take out your Fibonacci. This is your low right there. Okay, and that is your high. It's not complicated, guys. It's not complicated. Okay, so under this equilibrium here, this is the equilibrium. I mean, this is a discount level, okay, under the equilibrium. So this is where you start looking for your POI. And where is your POI? Where is first POI? This one is very clear. Okay, this one is very clear. If you want, you can even do this. This is not your POI. This is not your POI. This is not your POI. All these candles are just within this green candle here. Okay, so be careful. Be careful with this. Even if it's very clear, you can still lose your trade. Okay, just be careful the way you mark your POIs. I don't want you to be marking inside candles. All right, so after finding your POI, you can remove your Fibonacci. Okay, that's our POI. Yeah, wait for the market to reach that POI and then look for a buy setup. We are in an uptrend. We are looking for buy setups. Okay, okay, we have been touched there. So we can go down to the 15-minute chart. Okay, under the 15-minute chart here, we are still looking for buy setups. So the market made this pullback here. Okay, so this is the low. I can't see clearly where the, okay, yeah. So the market made this pullback here and then made a change of character right there. That's a change of character right there. That's our change of character right here. Okay, now after making a change of character here, I say that after a change of character, this is the lower time frame. Look for a POI where you are going to enter your trade. Okay, if you want, you can even draw your Fibonacci like that. This is the low right here. Okay, to that high. So under this orange thingy here, can you see any point of interest? Can you see any point of interest? Me, I can see one point of interest. And here it is, okay? Right here. I hope you can see it. I can see one point of interest right here, okay? No, that's not the point of interest, guys. Sorry about that. So this was already mitigated here, so we can't use it. It was already mitigated. There's no fair value gap here. It looked like there was a fair value gap, but no. Okay, so okay, we'll use this one. This one has a fair value gap. They are so tight. They are so tight. So right here. Right here. Okay. So if you enter here, this is the only POI that I can see here. So if you enter on this POI right here, this is going to be a stop loss right here. Okay. So like I said, guys, if this is your POI, you are going to enter right here on this black candle. And this is the high. Okay. This is the high right there. So like I said, a risk to reward ratio of 3. When the market goes to risk to reward ratio of 3, the 3 was somewhere here. Okay, take off some of those profits. You take off those profits because if, in fact, if you know how to calculate certain things, you anticipate like, okay, here, if the market goes against me, this is the money that I'm going to lose. So if you are not good with moving your stop loss to break even, that this is the money that is going to compensate you for whatever you're going to lose here. Okay, this is a risk to reward ratio of 4, meaning you've already taken out some of the profits here, and then the market goes down and then take out your low right here. Okay, this is what you need to be doing. All right, so when the market does that, as you can see, I didn't move my stop loss, it just got hit after taking some of the profits off. Okay, now start waiting for a new setup. All right, that low has already been taken out. Now here we are still looking for a new setup. Now the market came down to the POI, it's now looking for new setups. Okay, so let's play it forward. Okay, you can see okay, this is our pullback right there. Okay, meaning this level, this is the change of character. That is our change of character right there. That's our change of character. Okay, after a change of character, what do we do? uh we look for a point of interest. Okay, we look for a point of interest. Oh, okay, I'm very tired. We look for a point of interest, and in this leg you don't even need inducement. Okay, the market has already taken out this low. Okay, this low has already been taken out, meaning you don't need inducement for you to enter any trade here. Okay, so if the market comes back down, okay, you can enter. Let's move the Fibonacci. Even if you don't need inducement, you need to enter in a discount. Okay, don't just do what you want just because you see the market running. Okay, here it has even made inducement there which you don't even need. Okay, so let's just wait. Oh, okay, okay, it hasn't gone to a POI, it hasn't even reached the discount. Okay, so right here, guys, the market has made a break of structure. This is a break of structure. Okay, there was a change of character here, and this right here is our break of structure. Okay, this is a BOS. Okay, meaning now we have to start looking for our POI from here all the way to whatever we are going to be given here. Okay, so this is what we do now. Let's remove this. Just let it play out. Okay, so here it made another BOS. Please, do not force any entry. Okay, when the market is going against when the market is going very fast like this and you are not catching anything, please don't force any trade. You are going to lose money. You are going to lose your way. Okay, if the market hasn't given you any trade entry, do not enter. Okay, so again, from this low to whatever high the market made, I hope you can see it. This is the lower time frame. The market made this inducement right here, which has been taken out. I can mark it. Let me just mark it. Inducement there. Have I written? Okay, so that's inducement right there, which has already been taken out here. So you can take out your Fibonacci here from that low to that high. Right there to that high. Right there. Okay. Now, this is where it gets tricky. Okay. Right here. You can see the market just playing around. The market has not yet gone through the discount. So do not force any entry. Do not force any entry. I'm saying this again. Okay. Just let it play out. Now, this has already been taken out. Here you can see there's what? There's a fair value gap. Okay. I know most of you don't enter your trades in a fair value gap. Okay. Meaning you only want to enter on an order block. So guys, if I ask you what can you see here under the equilibrium here, under the equilibrium level, any unmitigated order block that you can see here, okay? This takes a lot of practice, guys, for you to see certain things, okay? So to your left there, to your left, here I can see a single candle order block. This is, it's under that equilibrium level there. This is a single candle order block which has not been mitigated. If we draw it out like this, these are some of the things uh, you don't just look at them and then be like, ah, no, this cannot be, this cannot happen or whatever. Okay, just draw it out like that. Okay, in case of anything, okay. Of course, down here, you also have this order block here. And then all the way down there, there's nothing, which means this is going to be your extreme. Again, you have other single candle order blocks around this area. So when you have like way too much single candle order blocks, this becomes a really, really good area of interest. Okay. But you've already marked your first single candle order block there. If you want, which I wouldn't advise, it's way too much risk. If you go all the way down and then put your stop loss down there, it's just way too much risk. Okay. If this first single candle order block doesn't work, look for another entry. Okay. I'm showing you how to lose, win, and miss trades. That's what I'm trying to show you. There's no need of you panicking. If you see a POI, okay. Oof, well, okay. So if you don't want a single candle order block, you are going to miss this trade. Okay. But again, if you marked here, right there, okay, right there, you are still going to win. So here you have two traders, two different traders. Okay, you have a trader that may be a bit advanced, I should say, and then there's maybe some of you who just know the general order blocks. Okay, so these, if you drew your, this is your POI. Okay, this is going to be your POI. It was just kissed here, just kissed. All right. So if there was someone who entered here, right on that surface there, okay. So this is what trading is about, guys. And then this is where your stop loss was going to be. Okay. both of you were going to win. Oh, risk to reward ratio of 3. Yeah, at least there. And then most of you know this order block, okay? The one that was just kissed here. Okay, so if you were going to enter right here, eh, if you were going to enter right there, and then you're, okay, right there, you're also going to get something, okay? All right, so let's just play it out. Okay, right there. Have we been hit here? Let me remove this. Okay, this one is not hit. I want to see if this one was hit. Okay, no, not hit. Okay, so let's move. Let's move. Okay, it looks like it was still going up. Let's go to the forward chart. Let's see what happened here. If there's anything that happened. Okay, so if you took any of those setups, you were going to win. Okay, any of the two setups were still going to win. Yeah, so that's how trading is. You might be looking at the same chart, but you'll be seeing different things. Okay, so right there, that's a risk to reward ratio of 55, guys. 1 to 55. This is how you grow your accounts. Okay, that is how you grow your accounts. So you mark that as your break of structure on the forward chart. This is a break of structure right there. Okay, we move, we start looking for something else. Let me remove that POI. Okay, so now imagine, even if you lost something, maybe, we are humans, you made a mistake and whatever. Maybe let's say just down there, maybe due to greed or you are just impatient, then you lost like 3 trades. Those 3 trades, just with this one win here, those 3 trades will be compensated. Okay, I'm not saying that you should now be reckless just because you can be compensated. No, this is what your patience is what builds character. Okay, it's very good in the long run if you just keep you know your discipline intact. Okay, let's move. Let's move here. There's no inducement here. The inducement that I can see, I don't know if this is inducement. Yeah. No. Okay. There's no inducement here. So let's see what happens. If the market comes all the way down, this is not a change of character. So let's see what. Okay. Okay. So this is inducement now. It has made inducement. Let's see if it's going to be taken out. Okay. We have new in. Okay. Let's see here. I can see a break of structure. Okay. So right here, this was inducement. Okay. I hope you can see it. I don't want to explain it. You should watch the video on inducement. So this is your inducement right here, which was taken out here, and then the market made the break of structure up there. This is a trade that this is some of the trades that you just miss. Okay, let me show you why you would miss that trade. That's a break of structure. All right. So yeah, so this is the low right here. If you drew your Fibonacci from this low, okay, to that high there, okay, it was nowhere close to this equilibrium level here. Okay, it was nowhere close. So this was going to be a missed trade. Okay, so still just wait. There's no need for you to rush for anything. Okay, the market has already, oh no, that's not okay. Let's see how it goes. Okay, inducement looks like it has, okay, inducement has clearly been taken out there. Let's see. Okay, inducement is here. Let's see. Okay, now it has been taken out. So from this low, this is where your new low is now, to that high. Okay, where is your first? Where is your first POI? Your decision of POI. Your decision of POI is right here. As you can see, this is our decision of POI. This is our decision of POI right here. So you can mark. These are inside candles here. Do not mark these. Okay. In fact, this is not the decision. The decision is right here. This is the decision. This is the decision right here. I didn't see it. Okay. Let's see if there's anything. Okay. Oh, it has already been. So let's go to 15-minute chart. Okay. So the decision has already been touched. Let's see if there's any entry. Okay. Entry setup. Come on. Okay. Okay. Let's go to the forward chart. It has taken out that low, so let's see what's happening up there. It hasn't been taken out yet, so let's move. Wait. This happened way too fast. Let me see what's happening down. Oh, okay. Nothing happened. So, okay, right here. Right here. Okay, so this was going to be a loss. Okay, and this is the 8:30. This is the 8:30 news. This must be news or something. This one here. Okay, so this was going to be a loss. I would have definitely taken this trade. Okay. So guys, I'm showing you the wins and the losses and the trades that you can lose. Okay. So right here, if you entered here, if you entered right here, this was going to be a loss. Okay. The stop losses are always, I never change my stop losses. That's how the stop losses have always been. So this was going to be a loss. Okay. So the moment you make this loss, okay, let me see what's happening on the forward chart. So that was the decision of POI. That was the decision of POI. Let's go to the down here. That is the extreme POI, which we didn't even mark. You can see it even as inside candles. Okay, let's see if there was anything on this decision of on this extreme POI which has already been touched. Let's go back to 15-minute time frame. Okay, let's remove this first. Okay. You need to be very, very, very careful. Let's remove there. Okay. All right. So this is the extreme POI. Let's move. See what's happening. You haven't made any change of character here. The first change of character is supposed to be all the way up there. Okay. This was the last low. Okay. And then the market came down with this 830 candle, and that is your last high. Okay. So let's move it. See if it makes a change of character. Okay, looks like a change of character was made right here. Right here. That's your chop. Okay. Okay. And where is inducement? Looks like inducement is down here. Okay. Inducement has already been taken out. So from the Fibonacci, put it down here to the upside. Where is your first POI? Your first POI is right here. Okay, you can see this candle here. I think most of you, what you fear is loss. Okay, it's because when you lose, it always takes a toll on you. Okay, and then when you win, you become way too pompous. Okay, you get too confident that you start taking trades that you are not supposed to take. Okay, which is very bad. Wait, do we have any extreme order blocks here? Uh, Let me draw my Fibonacci here. I don't want to be missing things. I want you to be using this for your back testing. Okay, down here. No, I can't see anything. Okay, okay. So, okay, okay. So right here, guys. Oh, I didn't even put. Okay, so if you went long here, right here, okay, I'm saying it again, take partials. Okay, this was your high right there. This was your high, which was already over 3 right there. If you took your partials and then your stop loss is hit right, and then it even made this total soup formation here, yeah, which means the market is still going down. Okay, so here you are going to lose. Okay, after taking off some of the profits, please take partials. It's really going to help you in your trading. Okay, you won't be losing your mind that much. Okay, yeah. So here, wait for a new setup. Okay, wait for a new setup. No need to rush. No need for. Oh, okay. This law has been taken out, I think. Let's see. No, it hasn't. It hasn't been taken out yet. So, okay. But the market has already gone into your POI. So, It would have been nice. I think it was taken out right here. Yeah, so the market makes a lot of these movements a lot of time. Yeah, yeah. So these are some of the trades that you are going to miss. Okay, the market can make this random, like really fast movement here. Imagine you are waiting for a buy setup. Is it frustrating? Yes, it is very frustrating. I've seen a lot of these. You're waiting for a buy setup, you're waiting for this low to be taken out at least for you to look for a buy setup, and then it's just taken out by a week. Okay, and the reason it was taken out by a week is because we have made this change of character. Okay, so we are expecting a break of structure up there, but here as you can see, the market didn't break structure. It just did a liquidity sweep here with these highs there. Okay, made this turtle soup, came down again, and then went all the way, cleared out that low, and then exploded. I don't know if it's news or whatever, but after this, I'm not looking for an entry. Okay, here it's fine, you can just miss this trade. If the trade goes way too high from your POI, it's fine, just look for just wait for it to break structure or something. Okay, yeah, it looks like it was really going and it was fast. Yeah, let's see what's happening on the forward chart. Yeah, you can't take a trade there, because if you do this, this is why you can't take that trade. Okay, yeah, so like the market was already over the zero point 0.5 level. It's already in premium, so there's no reason for you to be looking for a buy in a premium. No, we look for buys down here. Okay, so this one you are definitely going to miss it. Yeah, just wait. Okay, so it has made a break of structure there. That's a break of structure. Okay, you mark your break of structure right here. Okay, wait for it to take out inducement, then look for your POI. Okay, let's just do that fast. Where is our, okay, this is our inducement right here. So oops, inducement taken out right here. Has it been taken out? Let me see, it's not that clear. Wait, let me draw a line. I need to be sure. Okay, there is our inducement. No, they are on the same level. It hasn't been taken out, so let's wait. Let's wait. Yeah. And by the way, that's not even inducement. As you can see, they are all just on the same level. So this is not a break of structure at all. It's not a break of structure. I didn't see it. Yeah, if we zoom in down there, you can see they're just on the same level. I thought the law was cleared out. So yeah, but these are liquidity trap. This is SMT, guys. This is when you see things like this, it's very good. The market is likely to come down just to take out these lows. Okay. Yeah. So hope that happens. Let's see what was happening. Okay. So this is our inducement level, which has been taken out. Okay. Inducement taken out, and this is the low. So from the low to the high, Where is our POI? Where is our point of interest, guys? This is not your point of interest. Everything has been mitigated here. Your point, the only point of interest I can see is this guy down here. Okay, this guy right here. Mhm. Okay, that's trading, guys. This is what I do. There's nothing like, no. What exactly do you look for? What exactly do you look for when you're doing this? There's no holy grail or whatever. It's just discipline and patience. Okay. If you lose, you lose. If you win, you win. Okay. You win some, you lose some. That's all. Okay. Let's move this in case it comes all the way down. Okay, looks like it's coming down. Okay. Mhm. This is called accumulation, guys, or consolidation if you want. It takes forever. Okay, the market does this, and since you're on the forward chart, it really takes very long. Okay, but the market mostly does this, and then it's followed up by manipulation. Okay, manipulation and then distribution. So there's accumulation, manipulation, and then distribution. The manipulation that I'm expecting is for the market to clear out these relatively equal lows. Okay, and then distribution is to the upside. That's what I'm anticipating. Okay, so let's see if it, okay, we have touched down. So let's see when we go down what happens. Okay, is there a change of character? Not yet. Wait, has this changed? Okay, there's actually a change of character. This was the last pullback. So there is our change of character. Okay, so from down here I can see inducement has already been taken out, meaning from down here to all the way up there. What have I done down here? Oh, okay, and then up there. Okay, okay, all right. So here under the 0.5 level, what are we looking for? As you can see, inducement has already been taken out. By the way, guys, it's not just an order block with a fair value gap that we are looking for here. Okay, I'm trying to help you out advance. Okay, there are certain trades, if I was taking the same trade as you are taking, there are certain levels where I would take a trade and then you'll be surprised why the market acted in a certain way. For you, that would be like, okay, there's something that you are not telling me. Okay, but I've already taught you what a single candle order block is. Okay, but for some reason, so- some of you tend to just forget about it, like play it, downplay it or something. I don't know. So from your equilibrium level there, okay, if you look down here, do we have first in this leg, do we have any unmitigated order blocks? These are mitigated. Okay, I can see these are this was a single candle order block here, which was mitigated right here. Okay, it was mitigated right there. And then, okay, going down, we're going down. This one is also mitigated. If you want, you can even be drawing them out like that. Okay, it takes a lot of attention for you to be, this is already mitigated here, as you can see. Okay, another single candle double right there. This one here. Okay, right there. Okay, now this guy right here, the reason I don't like candles that form just on the edge of the equilibrium there, and you can see part of it is even outside. Okay, these are very dangerous. These are very, very dangerous candles here. In most cases, they just act as inducement. Okay, so when you are looking for POI, please just make sure that they are down. If you are buying, just make sure they are down the discount level. Okay, so there we have. Okay, so let me just draw it out like that. If it doesn't go all the way down, it's also fine. We are going to miss this trade. Yeah, and then you have other single candle order blocks here. You have two here. If you want, you can draw them out, but for now, we'll just draw this. If uh, if you want, you can draw it all the way, since we have other single candle order blocks down there. But I never do this. This is way too much risk. I don't like having way too much risk. Okay, I would rather have just this small risk here, okay, with this single candle order block. If this is hit, then I'll go with these single candle order blocks. Okay, they'll have uh their own stop losses. Okay, if this is hit, and if the market doesn't go all the way, it's also fine. So let's see. It's okay. So if it's touched here, you can enter. You can take a risk right here. Don't go all the way down there to put your stop loss. The moment I start seeing, especially students doing this, it's because you don't have confidence in what you are doing. You don't have confidence in your analysis. Okay? And we all don't like losing, but it's not okay if you are being scared of losing. Losing is bad and we don't like it. But when you start like being scared of losing, it now becomes a problem. Okay? So we take that small risk. Let's see. Okay. Okay. So that you take off some of the profits right there. Okay. Some profits can be taken out right there if you took this trade. Okay. Let's see the forward chart. What's happening? Okay. So this is where we took some of the profits, and let's see. Okay. Let's see what happens. Okay. Okay. Strike ratio of 24, not that bad. Let's see if it went okay. No, it didn't go all the way. So it came down and hit, let's say, okay, not yet. It's still moving. I thought the stop loss was hit, but not yet. So Let's see how it's going. If it goes back, we look for a new trade sale. Okay, it just went all the way. Okay, so the last high is okay. Let me mark this as a break of structure. This is your break of structure right here. Okay, so it takes time for some of these trades to really pan out, but if you just have enough patience, this is a risk to reward ratio of 8. Meaning if you lost like 8 times, which is not even possible, guys. If you just use the same lot size, okay? If you are not one of those who take different lot sizes on a lot of trades. Yeah, so if you lost like 80 times just here, you would have been compensated just with this one win. So it's not about how many times you are losing, guys. It's how you lose. That's what matters. Okay, as you can see, even the trades that we are losing, we are taking out some of the profits still, even on trades that we are losing. Okay, so a risk to reward ratio of 8 is a lot, guys. Okay, so from here you start. Let me remove this. You continue. You continue the same process. Okay. You okay? So the market has already made a break of structure. What do we look for? We look for new inducement for us to enter. I mean, for us to look for a point of interest. Wait for the market to take out inducement. Inducement. Okay, this is your inducement. It has been taken out. So you draw your Fibonacci from this low to that high. Can you see any unmitigated order block here? We are looking for a decision and an extreme POI. Order blocks, if you look closely, order blocks down here are mitigated. Okay, they are mitigated. If you see even down here, they are mitigated. You can't even see any fair value gap. They are all mitigated. Okay, I was trying to look for a single gain order block, but no, they are mitigated. So let's see, unless the market just makes something that we can work with. Let's see, the market at least makes something that I can work with. Then we can see if we can enter. Otherwise, no. Mm, yeah. There's really nothing. Okay. Oh, all right. This is actually the current. Okay, so the current market has already changed character. Okay. There was really nothing there. So this is the change of character. Guys, this is the British pound against the US dollar. Okay, if you want, you can do back testing on your own. This is how you learn. Okay, you can use the same chart for you to back test. Okay, when you miss out on a certain issue, you can just go back. You can just go back to this video and then look for where you're going wrong. I'm telling you, reach a level where you start seeing things that even me I can't see. Okay, For me, I just like to keep it straightforward, clear and straightforward. Okay, that's how I like it. So we started from here, guys. We lost some trades, got some partials, won some trades, missed some trades. Okay, just within this leg right here, just this movement here. All right, so just be patient, maintain your discipline. There's no need to rush. If you rush, you crash. Okay, so guys, until next time, this has been Dion Trades. This is a very long video, but I just wanted to do this, guys, to show you the step-by-step guide. Okay, so you can use this even when you are backtesting. All right, guys, till next time, happy trading.